GM, good morning. Welcome to the Milk Road Show, the daily crypto show that's as important as checking your credit card statement after a big night out. I'm your host, Jay Hamilton. It's Saturday, February 15th. And in today's show, we're talking about an important trend that we are seeing. RWAs and stables are coming on chain at a rapid rate right now. I'm talking billions per week. And soon, equities are also going to start to come on chain. So, this means that we are moving from the crypto economy being dominated by crypto native assets to the trend of TradFi assets. What does this mean for DeFi? What does this mean for crypto? And most importantly, how do you invest your capital to take advantage of this growing trend? That's what we'll discuss today. We also give our specific takes on some tokens, Maker, Hyperliquid, and Ondo. So stick around to hear those at the end. Now, today's episode was actually recorded earlier this week and released to our pro members. If you want to get access to this episode, the pro research meeting every week during the week and get this alpha early, then you can go pro today, hit the link in the show notes. Or if you prefer to just wait and get it for free, we release this every Saturday for you guys. Today's episode is brought to you by Consensus, who has Consensus Hong Kong coming up this week, February 18th to 20th in Hong Kong. If you want to go to that and meet with some of the best crypto builders in the world, check out the link in the show notes and you can get 15% off your ticket. Use the code MILKROAD. Also, today's episode is brought to you by Crypto.com credit cards, one of my favorite cards in this space. Highly recommend you guys check it out. With that, join me in welcoming the Milk Road Pro team for the weekly Milk Road Pro research meeting.
Gentlemen, we're back for another pro research meeting. Turns out the people liked the session last week. I guess it was one of the best performing episodes. So I don't think we tried to make this a great performing episode. We just literally want to talk markets and talk crypto shop, which we do every week anyway. Now we're recording it, and I guess it works. So that's cool. Shout out to the audience. Glad you like our shit. We're going to keep rolling. We're going to keep doing this every week, I think, because we do it anyway. So why not record it? Okay, we got a couple things to discuss in today's research meeting, a couple things in our portfolio that we want to just chat about, a couple hype new tokens, and then just some ideas that we've been tossing around. Just want to explore them. We don't really have a conclusion or a full thesis or idea on it yet, but I just want to share some numbers of things I'm noticing and just get everyone to kind of chat about it. Before we do that, though, let's just talk markets. It's been a crazy volatile 2025 so far. Price hasn't really moved. We're sitting in the same spot we have been the whole time. But if you happen to be keeping your eyes on the charts, we're way the heck up here, then we're way the hell down here. It's been wild. Some people are thinking, have we maybe bottomed and we're kind of ready to go on our next leg up? I have some opinions here, but let's just see. Anyone else have any strong opinions in terms of just markets in general? Where are we at, or what are you guys thinking?
Feels to me like the liquidation that happened over this weekend might be the bottom signal that we all are looking for, like a local bottom signal that we're all looking for. I mean, I think it's clear. I don't think any of us think this is the top, although I'm sure some people listening might think that, but definitely don't think that. But I feel like that type of flush out usually signals a local bottom. So I feel like
Last
things,
weekend, you mean, right? Not this weekend, last weekend?
yeah,
Yep.
this past weekend.
Here, let me share a screen. I'll show you what we're talking about here. See this one? So this past weekend, so February 3rd. Yeah, I look at the volumes on that. So I got, if you're not watching, this is the ETH chart. And those volumes are massive, and that candle is fucking huge too. The last time we had volumes this high was the big bottom we had last year in August, right? When we had the end carry trade, we had this huge kind of drop. And then, look, it didn't just go up from there. We still chopped a bunch, but that did mark the bottom, right? And so it looks very similar here. Doesn't mean we go up from here, but maybe that, what did we hit? Like 2100, 2150 on ETH. Maybe that does hit the low. I don't think Bitcoin had as bad. Like Bitcoin just looks like what drop? What pullback? What are you even talking about? Solana, yeah, it was pretty heavy, but this was earlier actually. This was back in January. Man, that's crazy. Solana and Bitcoin didn't even go lower, whereas ETH had that massive bottom out. Anyway, continue. I just want to show those on the charts.
It was probably the worst liquidation event in history of crypto. And guess what? Like nothing happened. DeFi worked as it was supposed to work, and it just like tested that even through these difficult times, it all works. That's awesome to see.
Yeah. When I look, so the main chart that I look at right now, which tells me probably we've bottomed, is, let me just share screen again here, is this, which is the ISM. So we've talked about this a lot. Well, sort of talked about this. We wrote a lot of pro reports on this in terms of the business cycle, which is kind of how we at Pro form our thesis around markets. If we've bottomed in terms of, or if we've topped in terms of the entire cycle, is around the business cycle. And so you might have heard us talk about like macro seasons or crypto seasons, like summer, winter, fall, etc. And usually when the business cycle passes 50, or sorry, when the ISM passes 50, that is generally your signal that like we're in macro summer, and generally risk assets do really well in this world. This is when you get your banana zone. And so we've been saying a long time, like the banana zone's coming, but it's just actually kind of been delayed because we haven't had this, like, look at how long it took for the ISM to pop up here. ISM, by the way, is
User Manufacturing Index.
Yes. Yeah. Basically, it's like how much they're like the economy is kind of growing and being people purchasing things and buying things, like things happening, right? So it's a real world look at the economy, not like a estimated look at the economy. It's like what's actually happening. Now, obviously it lags or whatever, but when it hits 50 and above, that's generally a very bullish sign. Now, the thing that's generally, this also correlates well with liquidity. Liquidity's still lagging, but it looks like global liquidity's bottomed. I don't have the chart up right now, but it looks like it's maybe bottomed as well. So I think at some point this is going to really pick up. And I think the ISM is going to pick up a ton. Generally, this would mean that things are going to go crazy, but it doesn't mean it happens right away. And I think what's holding back markets is just the uncertainty with Trump, right? And I don't know when we're going to be done with that. So it's I don't want to call, probably that ETH bottom there is the bottom, but I don't think it's like, okay, we're going to go to Valhalla now and we're going to go the next leg up. I think this could be chopped for a while. And I don't know that we can really decide that, because we got to figure out, when does this tariff shit going to be done? When are we going to have more just kind of like conclusive evidence of what's going to happen with Trump and the administration? I think they're doing a fucking sick job, at least for the US. I know everyone else is kind of pissed about it. At least my parents are, which I don't know why they are. But anyway, it's just, we don't know when that's going to end. And so I think that's going to hold back markets for a little while. But otherwise, like the market structure looks very bullish. And so I'd be buying here for sure. If you were able to buy, I know some people in our pro Discord were able to buy on that 3rd of February when everything dumped. Like kudos to you, because I don't think we're going lower, or much lower anyway. But I think we're preparing for a next big run up. It's kind of reminds you of last year, right? I hope it's not the same though, because that was like 8 months of chop. So let's hope we don't have that. But I think we will have a little bit more chop. So originally I thought we'd kind of rip end of January and February, et cetera, all the way into like April, May. I don't know if that's going to happen. We'll have to see what happens with these tariffs and Trump.
But
There
what
you go.
about liquidity? As long as we don't get tax rate cuts, we basically don't have the power to pump all of these assets, in my opinion, at least. And the strong economy shows us there's nothing going wrong, basically, in the US, so they don't have to cut.
Yeah, I
Isn't
mean,
that a
they're
bad
getting
thing for us.
Yeah, it's a mix, right? Like they're also making the government extremely efficient. They've probably cut, I don't know, billions and billions. I don't know if it's like hundreds of billions yet, but a lot of spending from the government, which helps with the deficit, means they potentially might not need to print as much. But it doesn't matter. Countries are still going to need to print all around the world. It's not going to make that much of a difference this soon. They still have to refinance all their debt, and so liquidity is coming regardless. And the dollar, we'll see if it's topped out here. Where is the Dixie? I can pull that up as well. Yeah, we're kind of still sitting up there, but I mean, we're lower than we were. Like we got up to 110 for a bit there. We're at 108. We'll see what happens. Again, the dollar's just waiting to see what happens with tariffs and everything else. So I think we just got to wait for a lot of this stuff to calm down. I think the dollar remains fairly strong, but I think it does come back down into this range. And then we'll see what happens with rates. But ultimately, I think liquidity is coming back no matter what this year, and we're going to have kind of expansion in the economy, which is the ISM. And so I think we're going to have a good year. But it's just going to be volatile and weird because we got to figure out what's going on with Trump. So I don't know, no strong opinions, I'd say. But
the one thing I will say about Trump and tariffs is Trump is very motivated by markets, so he doesn't want to crash markets either. No. And what he did with the first tariff announcement, which I think is, I gotta say, is genius, is he tweeted it. That wasn't an official announcement. He just tweeted, "Hey, I'm going to start tariffs on Canada and Mexico at 25% on February 1st."
Negotiations, that's all.
And it just crashed markets. And then he was like, "Oh, that's what that did. Okay, great." Backed off, right? And was like, "Oh, we're going to extend it out a month," right? So I think people are very worried because yes, he is very motivated by Americanism and American accelerationism and all these things. And so, like, yeah, he does care about, bringing more to America, America first, but he also really does care about markets, and tariffs impact the global economy. So I think there's a balance that he's playing here that I think we won't see what he is threatening as much. The other thing on macro is just like we know QE is coming because the US debt is $1 trillion
Insane.
in
Yeah.
annual spending on the interest rate. Like
And rates are too high.
They have to deal with that. So it's like it's just inevitable, right? I think it's just nobody knows when, but it's coming.
Yeah. So anyway, macro I think looks pretty good. We just got to wait to figure this stuff out in terms of Trump. So we just got to be patient. Don't be leveraged right now because the swings in these assets are insane. And so just don't be leveraged. Hold some spot. Buy the good stuff. And I think we're gonna be all right. Okay, let's move into the next conversation that I want to have, which is just something I've been eyeing and kind of thinking about. To me, the only chart that I care about and it really like matters to me in crypto is stablecoins. And I know that's the boring thing that everyone freaking hates, but I love it because this chart looks insane. So we currently sit at $224 billion worth of stablecoins, okay? Which is up a shit ton. It is up 50. Let me see, get the numbers here correctly. What is it up? Since November 1st, when Trump took over, it's up $52 billion in 10 weeks. So to put that in perspective, that means $5.2 billion are moving on chain every week for the last month, 2.5 months. That's insane amount of numbers. Okay. Then if we look at real world assets, so this is like other TradFi, like think of the dollar as a TradFi asset, right? Fiat currency moving on chain. There are other TradFi assets that are moving on chain, right? That's private credit, that's US Treasury debt, commodities, stocks eventually, et cetera. That currently sits at 17 billion. Okay. And in November 1st, that was sitting around, let's just see here, I'll get the exact number, 13.5 billion. Okay. So we're up about 3.5 billion in 10 weeks. So that's $350 million of TradFi assets moving on chain per week in the last 10 weeks. So these numbers are pretty crazy. And if you do the math here, let's assume no growth rate change. Okay. So it continues to grow at the rate it currently is right now. So that's $5.5 billion of TradFi assets coming on chain every single week. If we just do the math to look a year out, Feb 2026, right? That's $288 billion that are going to move on chain. So then we'll have 530 billion TradFi assets on chain by Feb 2026. Now, my assumption is this growth rate increases, right? Because we're going to have better regulation. It's already increased a ton starting in November because of Trump taking over. I imagine that doesn't slow down. I think that only picks up. So we're going to be somewhere between 550 billion to $1 trillion of traditional assets coming on chain, because like stocks haven't even started to come on chain yet. They're just starting to, right? Ondo just announced they're going to do that. There's a few you can buy on Base. They can get like Tesla and a few others, but it's super small. I would imagine that picks up pretty heavy this year. And so I do really think this probably goes to maybe $1 trillion. To put that in perspective, let's exclude Bitcoin's market cap. There is only $1 trillion of crypto native assets on chain right now, right? And so stablecoins and real world assets are 25% of that currently. And I think that's going to go to $1 trillion by the end of the year. Now, I also think that crypto native assets are going to go up a lot by the end of the year. So I don't think they're going to like be the same. But that's a lot of new types of assets that come on chain. And I just want to try to understand and get your guys' opinion on like, what does this mean for the on-chain economy? And what are the real winners here from this? Like, if we bring a bunch of stocks on chain, so Tesla moves on chain and Microsoft and Coinbase and whatever all move on chain, and we get treasuries on chain and we have, $500 billion of stablecoins on chain and credit comes on chain, is all that traded on like Uniswap and normal dexes? Like obviously this is very bullish for block space because it's just more things that need to be moved on blockchains, and they're going to require block space for that. So, okay, bullish wherever the stuff goes, which interestingly, most of it is moving on Ethereum, which is funny because everyone's like, Ethereum's dead. And then you look at the stocks that are coming on chain, the private credit, the stable coins, it's almost all on main chain Ethereum, which is odd to me. Obviously, Solana is having a pretty good jump in stablecoins as well. It's hit like 12 billion. So like there's growth there too. But the growth is actually faster on Ethereum. And so I'm just wondering, like, is this big for whatever new protocols come out that launch this stuff, like Ondo's new L1, which by the way is its own L1, it's not on Ethereum? Or is this big for like DEXs? Like, do you think people are going to trade stocks on Uniswap and trade private credit on Uniswap? Or like, how do you guys see this playing out? Adrian, why don't you start us off? You got any thoughts on this?
I hope most of it moves to Ethereum, but as you just mentioned, Ondo will launch their own L1. They have the good connections to Trump, to BlackRock, so I hope they don't get a too big part of the pie. I know there's an RWA specific layer 2, actually, Plume network, which did an interesting testnet where you can tokenize stuff, make NFTs from it. And this was actually fun. I'm wondering whether they will get more traction or whether, as you just said, most of it will basically be on layer 1 and then get traded on Uniswap. But certainly the existing infrastructure should profit a lot from it.
Yeah, I would be surprised if it's not a lot on the main blockchains that are ripping right now, like Base, Solana, maybe Ethereum. I guess ZK Sync is actually getting a lot of this real world asset stuff, which is I'm not really sure why. There's a new protocol I think that launched on there. But how cool would it be? The thing that I like about this is, like, let's say I'm on Base right now. I can own ETH. I can own Bitcoin through CBBTC, and I can swap into my ETH into Bitcoin. Now I know it's trusted Bitcoin, so like Bitcoin maxis, whatever. But if I just want exposure to it, right? I'm not putting my whole net worth into it and thinking the world's going to end. I can just do that for free using CowSwap on Base. That's insane. Now, if I want to take my ETH and I want to put it into a stock, that is extremely expensive right now, right? I got to like move it over to Coinbase, and then I've got to move it into fiat, and then I'm going to move it over to my Quest Trade or my bank, put it in my direct investing account. Then I can go buy Tesla, right? Or Coinbase. And that takes weeks and costs a lot of money. But let's say Base launches and there is already a protocol there. I can't remember the name of it. But let's say all of a sudden I can now trade Tesla on there, and I can trade Coinbase on there and more stocks. And then I can start to buy gold on there too, and uranium or whatever. Like, I'm never going to leave my cash or my capital from that one chain, right? It's just all going to sit there, and I'm going to do everything I need right there. Because right now it's very fragmented. We talk about L2 fragmentation. Think about like crypto asset fragmentation to traditional asset fragmentation. And that's all going to be in the same spot. And so I don't see why everyone doesn't move that way. Now, the other option is maybe it's not about which chain it's on. Maybe it's like Robinhood or Coinbase just gives the interface that allows you to trade stocks, crypto, commodities, treasuries, stablecoins, all in their interface, and like whatever chain it's on behind the scenes doesn't really matter. And you just do it in the app. And so maybe this is more bullish interface, which is like Coinbase, Robinhood, maybe PayPal. They don't seem to be pushing as strong as like Robinhood and Coinbase are. Or maybe this all happens on DEXs. That's what I'm not really sure. I would imagine it's on DEXs, and you're going to be able to trade Tesla on Uniswap in the near future, which is going to be pretty cool, which just means more volumes to DEXs, which means more value to DEXs. And so, I mean, Uniswap's valued at about 8 billion right now. The NASDAQ, for example, is I think 50 billion. And so, but the NASDAQ, you can't trade crypto. Uniswap, if you're all of a sudden you can trade stocks and you can trade crypto, like you can see where, and now there's more competition, I would say, in crypto right now for this stuff, but like you can see how these volumes are going to go way higher, and they'll eventually be valued. I would assume these DEXs will be valued more than something like the NASDAQ, which is quite interesting, unless Coinbase and Robinhood takes all that activity. That's what I'm unsure of. So we'll have to see how that plays out.
I think this will primarily first happen on the DEXs, not on Robinhood, because it just needs some time until they adopt that stuff. And I know from previous protocols who tried to tokenize stocks that they always had a problem with the peg. So I hope they have a new mechanism to hold it, because on Terra, a protocol on a DeFi chain, it didn't work out so far. So hopefully they do a better job then.
I think there's a protocol called Backed on Base, and it's got just a few stocks, but it's been pegged. They've done a good job on keeping it pegged, and it's worked quite well. And so I don't know. I think the main issue was more around just you couldn't do it in the US, and it was like hard to do it because of regulation. I think that goes away. So that's why I think Right now, we're not seeing any growth in stocks come on chain. I think that's about to rip in 2025. And I think that's going to be a really cool dynamic and probably a thing that brings the more TradFi institutional investors to actually come on chain, because now they can trade stocks at night, right? Like at any time on weekends, they can do whatever they want. And so like it feeds into their addiction.
And they can provide liquidity. Run with it.
Yeah, exactly. There's going to be so much they can do. So I think it's going to be like, I think a lot of institutions don't care about our crypto assets because most of our crypto assets are actually just dog shit. And so it's like, they probably want to come and use the chain, but they don't want to use the assets we have on the chain, right? But I think once we have better assets on chain, because like, to be frank, every crypto asset, almost like 99% are complete dog shit, like complete dog shit. Even some in our portfolio, we're just hoping that they become not dog shit soon, right? But almost everything is dog shit, including ETH, including Sol. They're all dog shit. And so institutions are like, we're not touching this stuff. But when Tesla and Microsoft stuff come on chain, okay, I think they actually might get a wallet, come on chain and fuck around. But I don't think they want to do it with like the dumb shit we have on chain right now. Martin, you got any thoughts on this kind of?
I wanted to talk about Ethereum because Ethereum is the most secure blockchain. And now when we are talking about layer twos and like all these sexy layer ones, cheaper, faster, whatever, they don't care. Like we care because we are retail. Like some people, few cents, it's much more manageable than if you are doing transaction of Ethereum mainnet costing $10. But like BlackRock, they don't care. Like the only thing that matters to them is the security. And what's the most secure blockchain?
And liquidity, right?
And liquidity. Yeah, that good point. So that's Ethereum mainnet. And like even for me, I still have most of my assets on Ethereum mainnet because that's the most secure chain there. And layer twos, fine, they are improving, but they are still multi-sigs, pretty much all of them. Yeah, it's like backed by Coinbase, so you have some trust in them and it should be fine, but you never know what happens, right? And yeah, Trump is bullish, but one day he wakes up and he will just do some stupid things and all of a sudden you can lost all your funds. So I think like BlackRock and all the big asset managers, they primarily care about the security, then the liquidity, and then everything else.
Yeah, I agree. Which by the way, makes me think that I don't think that Ondo actually gets a lot of traction here. I know you said that they have the ins with BlackRock. They don't. They have the ins with Securitize, which is what runs BlackRock's Biddle Fund. Ondo doesn't actually have a connection with BlackRock. And yeah, I can't see a brand new chain that just launched. What did they launch like last week? Or is it, maybe it's not even live yet? Yeah, right. It's not even live. So like, there's no way big companies are going to be launching a bunch of stocks and things on here, or like maybe Ondo launches it, but then like, will they actually put large liquidity in it? Like, I don't think so. I could see them doing it, one on Ethereum, as Martin just said, two on Base, because they can like some sort of partnership with Coinbase to do it, right? They're already putting a lot of their assets on Coinbase anyway, so that seems like an easy next step for them. But I don't see them doing it on a bunch of random L1s, especially brand new ones like Ondo. Martin,
depends on the timeline, because institutions take a very, very long time to do all of this stuff. When they start in 1 year, maybe Ondo's L1 is ready.
Right. I think this starts this year, though. Anything else you want to add, Martin?
Yeah, and then you were talking about Coinbase, Robinhood, if they are going to use DEXs or they are going to just use front end, but still use the traditional railways. I think it comes down to if you buy stock on Robinhood, what happens on the background. And I think they are using middlemen. I think Robinhood is using Citadel or someone. So if it's cheaper for them to provide you stock directly on chain, then they are going to do it because they can, everyone is here to make money. And if it's more effective, like cost effective for them to do it on chain, they're going to do it.
Well, you've already heard the founder of Robinhood. He came on, I think in January, he was on TV saying like, I think he said it's an order of magnitude cheaper for them to facilitate assets that are on chain than assets that are not on chain. And so like to me, it's so freaking obvious that all assets will go on chain, and that's how they're going to do this. I think that's going to, and I think we needed Trump though. We needed good regulation, right? In order for this to happen. And I think we're getting it. So Adrian is right. Does that happen this year, or do we got to wait for the regulation and then it starts, right? So it's like regulation comes end of 2025, then 2026, this stuff starts happening, or do they just start doing it pre-regulation? Because like technically there's no regulation saying they can't do it. They were just afraid that they'd go to jail or something.
There
you know?
was SAB 121, right?
True,
Which is,
true.
hot take. Everybody's waiting for the strategic Bitcoin reserve or the stockpile or whatever. But the removal of SAB 121 did
huge.
not get enough attention because that was absolutely huge. Because now banks can custody crypto. They couldn't custody crypto before. I mean, you could, but it was an accounting nightmare because you had to classify it as both an asset and a liability at the same time, which was totally ridiculous.
Be interesting to see how fast they do it, because they are slow moving. But I think it was whoever you had on the podcast was saying, like, it's not like they haven't been trying to do this. Like, it's already ready to do it. They just weren't allowed to do it. So like that could come pretty quick. One other thing on the TradFi world for a second is one thing I think we're going to see pretty soon here is some IPOs from crypto companies. And I'm just curious in your guys' takes on, like, how does this change the dynamic of crypto? Because one thing I think about is liquidity. So right now, if you want access to crypto, you generally move your assets on chain, or you got to buy Coinbase, or you buy the ETFs. It's kind of the only, or MicroStrategy, I guess, actually. And so we're probably going to get Kraken IPO, Consensus IPO, Circle IPO. There's going to be more. I'm not even sure who. You had one?
Chain analysis.
Chain analysis, maybe. Yeah. I guess some of the data company stuff. Like, I think there's going to be a bunch of IPOs.
I think there's going to be 10 to 20. Like, we're not just a few. Yeah. Dan Tapiero said he thinks that's the number we're looking at.
And so I just wonder, does that do anything to crypto markets? Again, remember, institutions want access to crypto, but they don't necessarily want access to all the shit coins that we have. They're going to love this equity, which is why I think they also are going to love Coinbase. Now, maybe they love the ETFs, Bitcoin. They haven't really loved ETH just yet. But I'm wondering, what does this change? Like, the dynamics have to change here. One, this, I think, legitimizes the crypto space. We have a bunch of these public companies, but at the same time, does it mean a lot of capital doesn't need to move on chain? I'm not exactly sure what happens. Does anyone have any thoughts here on what happens here? Because I think this is happening in the next, 6 months. We're going to see a bunch of IPOs, I'm pretty sure.
It's not exactly the same capital that would have gone on chain, I guess.
Right, I guess. Yeah.
But the rationale behind it is the same. Those are the companies that make money today, and the investors see potential, so that's why they'll invest probably. But is the IPO such a big attraction, or kind of getting attention? Hey, this is, I don't know, Kraken doing IPO, so go and learn about them. Versus, hey, what if there are some like on-chain businesses that they are not doing IPO, they have already token, which is liquid, but they might be making the same profits as, Kraken or something. So is it going to be like, hey, crypto doesn't only produce all the meme coins and all the shit. It also produces like very useful, profitable, legit businesses. And now your mind only works because you only think and look at the stock markets. What if you really look under the hood, what's available on crypto tokens today? That could be your edge.
You know what that just made me think of is, so I've been calling the Coinbase earnings, which is coming out on Thursday. We're recording this before that, the Super Bowl of crypto, right? And it's interesting because it is the only like public company and earnings call that Wall Street gets to listen to about crypto. So like whoever listens to it, which I don't think even many of them do, but they learn about crypto from Coinbase and nothing else, because there's no other earnings calls except for MicroStrategy. But like, that's not really teaching about crypto. It's just teaching about how to do whatever the hell he's doing over there. You know what I mean? Like, it's not a lot of like lessons in crypto. Whereas like, if you listen to Coinbase's earnings calls, they're talking about how L2s are working and how they're generating revenue from them, and they're doing this thing on chain, and they're creating these wallets, and they're talking about all the different revenue opportunities across the crypto space. Like, you really learn a lot about crypto by listening to Coinbase's earnings call. And when we have Circle doing that every 3 months, and you have Kraken doing that, and Consensus doing that, you're starting to get Wall Street to learn about all these different business models and like really the inner workings of crypto. And I think that's actually going to be a really big deal, because you get one spot to learn, and it's once every 3 months, and that's all you get. It's not enough for Wall Street to really figure out crypto. And I actually think that's going to be huge to educate and really help people like understand what's going on in this space. So it's actually going to be really cool for educational purposes. And then, I don't think it takes away a bunch of liquidity. I think it adds liquidity, because I think just more people will get more bullish like you said, it really legitimizes. Like when people start to learn about what Circle's doing, how much money they're making, how much they're growing, like every time Tether puts out something about how much money they're making, everyone on Wall Street's like, what the fuck is this thing? What's going on here? What's a stable coin? So I think ultimately it's going to be really good. Anyone else have any other thoughts?
Quick break in the show to tell you about the Crypto.com credit card, my favorite credit card in the space for spending on-chain dollars, no annual fees, a bunch of great perks like your Netflix and your Spotify subscription for free, airport lounge access, and you get cash back in crypto. Check out the link in the show notes to get your card today. With that, let's get back to the boys at Milk Road Pro. I think it brings a ton of attention in a positive way from an audience that is not, as you said, understand it and does not have access to information because they're not looking on chain and don't understand how to, right?
Yeah.
And then I do think it brings flows because I think these are different buyers, right? Those buying public stocks are very different than those buying on-chain assets, right? And so you have the convergence of flows coming in from both sides now, which is huge, right? If a whole bunch of these public crypto companies get a bunch of flows and have more capital, like that's massive. That's great for them. They can grow faster. They can hire more people. They can get more people working in crypto. Like all these things are just their tailwinds.
Yeah, I agree. There's also, and this is just a rumor, but it's potentially a thing. When these crypto companies go public, they can start to do the MicroStrategy play, tap into the TradFi debt and buy more crypto. And there is some rumors around Consensus doing this. So Joe Lubin, who was a co-founder of Ethereum, they build a bunch of products for Ethereum. They hold a lot of Ethereum. If they go public, supposedly there's this like rumor that he might be the sailor for Ethereum. And he'll start taking out debt against his company to buy more Ethereum and just run that playbook. That would be insane. And that could happen starting this year. And if that happens, like, oh man, that's going to be fun to have like more companies doing this for multiple different assets. It's just kind of funny that crypto companies just taking advantage of the traditional finance world just to get more crypto. But anyway, we'll see if that happens. There's just a lot more that can happen from this. So that's gonna be interesting. All right, let's talk about, we're sticking around stablecoins here, which is kind of where I started this whole conversation. But the most interesting chart to me right now is this. Let me just share my screen. Outside of the stablecoin one I showed, look at this. This is Sky's stablecoin, and their supply is just going absolutely bonkers. So it was at 5.24 billion on Jan 1, 2025. Today it sits at 8.43 billion. That's got to be the fastest growing protocol in 2025 so far in terms of like TVL, if you call this TVL. The supply has gone up 2 billion in a month and 10 days, which is absolutely nuts. So pretty cool to see. It's now like way ahead of Athena in terms of its capital. It's the third largest stable coin, and its trajectory is just going crazy. And it doesn't seem to stop. Every day it just adds like hundreds of million. It just keeps doing it. Every morning I wake up and I'm like, holy shit, it added 200 million more. Like this is crazy. Martin, what the heck's going on, man? And like, is this bullish? Is this not bullish? Like, what's your takes here?
Bullish for who? Like, normally I would say that it's super bullish for a maker that the circulating supply grows that fast. But you need to be aware, why is it growing so fast? And the reason is because SUSDS, which is their stablecoin, offered 12.5%, while all other rates in the markets were like maybe 8%. So Maker was pretty much offering super high attractive yield, and everyone was just want exposure to that super high yield. What changed this Monday is that they lowered the rates to 8.75%, and it's still above the average market rates, which are available on Aave, Morpho, whatever, right? So if you are investor in Maker, or we should say Sky, I keep saying Maker all the time. Fuck.
I can't switch. It's like Twitter and X. Like I still call
it
Twitter.
Yeah. The same thing. The problem is that even now they lowered the savings rate, but they are still paying 8.75%, which is just like they are able to generate some money using all that collateral that is on Maker, but now it's just on a break-even point. So they are like pretty much giving all the revenues they are making to the holders of their stablecoin. So right now Maker is like making zero profit. It's at the
And
break-even
they're not
point
buying
right now.
back any other tokens either, right?
Yes.
At the moment.
Yeah.
Yeah.
So like, but they are working on a solution which will introduce a rate setter, which will kind of update the rates more frequently based on the market conditions. So like it ensures that Sky remains profitable business, and it's not just like, you know, those crazy yields which are paid kind of out of pockets of Maker holders or investors, because we hold Maker or Sky tokens because we want to see profits, and now there are no profits. Everything is distributed to holders. So we want to see, yes, circulating supply growth is awesome, but at the same time we want to see that Maker profitability is still there and at some reasonable levels.
Right. What's interesting about Sky, or about sort of the supply here, is you can see, if we want to share screen again, I saw Rune, who's the founder of Maker, talking about this. Like, this is the diversification of where the yield all comes from. And so they have a large portion of it just comes from, so like 44% is in USDC sitting on Coinbase Prime. And they're getting for whatever the treasury yield is. And then they also have some cash RWA, same thing. They're getting just treasuries. So that's like 60% of all of the supply is just getting 4.5% from the treasuries, right? And then they're offering 8%, so they have to subsidize that. But then they have, the rest of it is in like Spark, et cetera, which is getting, I don't know, something like 12% or whatever it is in Spark right now. It changes all the time, but a lot larger percent. But what's interesting is the reason they do this, they have it in Coinbase and they have it in treasuries, is because this is liquid. So they can move this anytime in and out. And so what's interesting is at an $8.4 billion supply and having about 60% in liquid, stable coins, I guess right now it's 45%, let's call it. That means like almost $4 billion is pure liquid, which means if some institution wants to come in and buy or sell billions of dollars of USDS, they can do it with zero slippage. They can do it for free. And you don't get that kind of market almost anywhere in the world. And so what they're creating is something that's actually super valuable. One, for retail, who can just hold a stablecoin and make 8.75%. That's pretty sick. But also for institutions who can do the same thing, and they can move in and out anytime they want with zero slippage. You don't get that with any other stablecoin, right? Other than you can do it with USDT and USDC, but you're not earning any yield. So what's the point, right? So it's a game changer, I think, what they're doing. They just need to figure out what's the right yield aspect so they can stay profitable. And then if they're profitable, they can just buy back tokens, and this thing's like off to the races. So they've built, in my opinion, probably the best product in crypto currently, and the most usable product in crypto, because it's usable by retail, it's usable by institutions, and it's in the sector of the most obvious use case that's going to actually make it, which is stablecoins, right? Like, everyone's starting to talk about stablecoins. And so I think this, to me, is like the best setup. I absolutely love, and somehow this weekend Sky was down to like an $800 billion FTV. How is that even possible? 800 billion? That's insane. This thing's got to be worth way, 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 way more. It makes no sense. There's also, I think, I guess it's because it's not profitable right now, so people are selling out because they think it's not profitable. But like, that's a short-term thing, right? In my opinion.
I wish that was the case, that like everyone is selling because the fundamentals are not strong, but that's not the case. Like, people are just keep selling Maker because it's Maker. Everyone's selling Maker, and Maker price never goes up, right? No, but I think it's pretty hard for like just average person to understand what's going on and what are the current challenges that Maker is trying to face and address, and what are the upcoming catalysts, and like see the bigger picture. Like, for me, I spent a lot of time with Maker, and I know some things, but I don't know everything. And the problem is it's almost impossible to know everything.
Yeah.
But again, there is a solution for it. And like, now Maker is just interesting stablecoin out there. But what Maker is really building is something which is called Atlas, which will be kind of AI agent, which, like, if I have some questions about Sky, I don't need to go on the forum or Discord and chat with Rune, because he's not always answering. Sometimes he doesn't like my questions, so he just doesn't reply. But now they are building AI agent, which will be able to provide like everyone all the answers, what's going on, kind of bringing someone who is neutral and knows like everything, see all the communications around. So like, what if Maker at some point will catch AI narrative, because they are bringing this AI agent,
Well-
which they will open source and provide like everyone else too.
They're also beginning to use AI agents to like find yield and stuff, so they can get more, like, optimize their yield. At least that's like part of his like plan as well. And so really what you're getting when you buy USDS is just like the best risk adjusted yield, and you don't have to go and use DeFi. You just buy this token, it remains in your wallet, and you keep the custody of it. Nothing like that exists in this world. There's no other way that you can get this kind of yield where it remains in your own custody, and you don't have to go and find all that. You don't have to go around and play around with DeFi and move it into treasuries and do this and that. They just do it all for you. So I actually think, like, I'm a bit bearish on crypto in general lately. I just, like, outside of stablecoins and mainly what Sky is doing, there's not much that great going on in crypto, to be completely honest. A lot of it is a bunch of bullshit. I'm not going to lie. I think most of the AI stuff sucks. Even the AI agent stuff, which, like, yes, is exciting, I think kind of sucks in crypto. I actually just think there's not much more going on other than what Sky is doing. And then just blockchains in general, right? Like, as we said, all these assets are going to come on chain. There's meme coins, there's whatever. I know there's going to be a million assets on chain, and it's better to have them on chain than not on chain. And so that is an innovation in and of itself, right? Just the ability to send money or send assets and swap assets. So let's say DEXs, stable coins. Other than that, I'm just kind of like, meh, I don't know. But what Sky's doing is, I think
I'd love
that's
to
gonna
see
get done.
these numbers, but when will they get their branding in order? I saw in our community that many people were
Never.
very confused about the DAI as
Oh, yeah, people are
USDS
so
Maker
confused.
Sky.
Would they spend $50 million on that?
Yeah, that was insane. And even like if you go to their website, it's the explanation of what Sky is terrible. That sentence I just gave on like the best risk adjusted yield you can find in the world while maintaining custody. That should be their main freaking headline everywhere, because anyone can understand that. TradFi people, crypto people, if you go on their website, it's like, we're the decentralized blah, 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 and DAI and USDS are the like representation of our decentralized ecosystem. I'm like, what the heck are you guys talking about, dude? Who are you even speaking to? Anyway, don't get me started on that kind of stuff. Either
Is
way,
it a
what's happening?
decentralized governance thing that they don't get this right, or what happens there, Martin?
Yeah, the governance right now doesn't really work, because there are just 4 like really big delegates, and they pretty much outvote like everyone else, and they are kind of under the Rune's vision, so if there is a proposal and Runes want them to vote yes, they'll just go and vote yes. So it's
I
not
don't
like
even hate that.
But that's
I don't
true
hate
of-
that at all.
That's
a good thing.
and that's true of every protocol
Company.
that has decentralized governance. Like we're
Pretty
sitting here, Maker gets all the heat for this, but Arbitrum's the same, Optimism's the same. They're all like that.
You also want the visionary to be able to execute on the things they want. You know what I mean?
Yeah.
Like, I want Elon to have full control over Tesla at all times. I don't want a vote, a community vote whatsoever, ever. That's the dumbest thing ever to run a company. It's the last thing I'd ever want in a company I'm investing in. So like, I don't hate that at all. I know people are up in arms and like that sucks, but like, if you want a business to do well, you need a visionary, someone who just doesn't sleep at night. All they do is think about it. They wake up the next morning like, we got to do this. And then everyone goes to sleep and he stays up again and he goes, okay, now we got to do this. And you know what I mean? Like, that's how you move good businesses along. So like, I don't know. I don't mind that
But
stuff.
you need to listen the feedback and like talk to your community. And like, none of those delegates are ever communicating on Discord or anywhere. There's just a bunch of people on Discord asking questions. And if there's good day, you might be like and ruin an answer, but otherwise you are in lost and you don't know what's going on. What about the surplus? Like, what are the funds using for the surplus? Why it's not the surplus already funded with 120 mil? So the buybacks will start again. Like, there are so many the questions that people have and they don't get the answers, because it's all
I got
just
so many
Rune
questions about
talking
Tesla,
to
and I
people.
can't just sit there and ask Elon to answer my questions every day. And I don't want him to do that. I would much rather him just focus on building a business instead of answering my questions. Why do you think, Martin, that you deserve your questions answered? Like, tell me though, how does that make any sense that you think that you should go and get all the answers you want from some founder of a company? You shouldn't, right? Like, how much Maker do you own? Not enough that it matters. So, like, why? That's what I don't get about crypto. Is crypto's like, I just want answers. I want you to do what I said. And it's like, fuck all you guys. Just let these guys cook, you know?
That's the spirit of
why
Ethereum.
fuck the spirit. Fuck spirit. I don't think that matters. Just go and build. That's the only thing that matters in crypto. Go ship something. And right now, as I said, I'm not bullshitting almost anything in crypto because no one ships. Everyone just cries in this space. And that's bullshit to me. It's like, I just want to go to the people that actually don't feed into Twitter and feed into these community bullshit. Like, just go build something. And that's where I want to put my money. Do you know what I mean? And Rune is doing that. And I think everyone just gets so upset. It's like, I don't get it.
Like, you are just betting on one person who is not listening to feedback, and he is just like doing his own thing.
Steve Jobs hated feedback. He's built the best company in the entire world. He
Works
took
as long as the
feedback and he
person
would
doesn't
burn
get
it.
insane.
He would take feedback and he would just burn it. And he would go, you guys don't know what you need. I know what you need. And he would build it. And he built the best products in the world. What the fuck do we need feedback for? Sorry for all
if you
swearing, but
believe
I'm
he's
getting mad.
yeah. Well, you
I
need to
understand
listen.
feedback can be useful. I do agree with that, but I don't know.
And if there is more inputs which are like considered their inputs, and then like it reflects in the product and stuff, it might be pretty useful.
Agreed.
versus just ignoring everyone else.
Kyle, you're the angry bear today. I didn't expect this. Kyle's usually the bull in the room. Today he's bearish.
bullish.
He's
I'm
angry.
just bullish.
How's your bags right now, man? You okay?
Bags are great. I'm fine. I'm just bullish on some things. You know what I hate? You know what makes me really mad is every time price goes down, crypto Twitter just loses their mind. And right now, what crypto Twitter is doing is everyone is so horny for good headline news. And it's honestly disgusting to see what's going on Twitter right now. It's like, we have David Sachs come on and talk about this crypto stockpile, or they came on last week and they talked about what they're going to do for crypto. And everyone was whining and crying because he didn't buy $10 billion in Bitcoin. And I was like, we just had the US government talk about how they're going to do all these things for stablecoins and for crypto and whatever. And everyone's so mad because he didn't mention X token and they didn't buy X token. It's just like, they shouldn't buy most tokens because most tokens are trash. Do you know what I mean? Like, we got to go build things. And I just think this industry is just sitting here. Everyone's just waiting, twiddling their thumbs, going, when is someone going to launch an ETF for my token? And when is someone going to talk about it in the US government and buy it and put it in the stockpile? And it's like, that's it. That's all everyone cares about on crypto Twitter. And to me, it's just annoying.
But it's crypto Twitter. It's this industry. It's a group of marketers that get paid in tokens. Of course, they want their bags to go up.
Right. Yeah. True. So anyway, it's just I continue to focus in on the things that are actually being built that are good, which is to me stablecoins and Sky is really good right now. There's one more thing.
Aren't you excited about trading though? Like, I'm so excited about any product that is involved in trading. Yeah, I'm excited about stablecoins. Don't get me wrong. That is going to be compounding growth. But like right now, right? Like, you look at the DEXs, you look at the perp platforms. I know we're going to talk about Hype. Like, those are getting Jupiter, right? Like Aerodrome. All of those get me so excited right now.
Yes.
Not just
the ability to move assets freely for basically nothing is super exciting. So payments, trading assets that are both crypto native and non-crypto native. Yes. I mean, that's kind of what I was talking about at the beginning of just DEXs or Coinbase Robinhood facilitating trades of any asset in the world that can happen freely. Like, I think that's super exciting for sure. Yeah. Okay. Let's talk Hype. We got to do one more here and we got to get to it because we're running lower on time. Hype has obviously had a lot of hype lately. Adrian's been doing a bit of research. I think wanted to ask some questions around it. So why don't you let us know what's going on Hype these days, Adrian?
Sure. Yeah. Can you share my screen?
Yep.
Yeah, with Hyperliquid. Maybe if you're bullish on volume, then or if you're into trading, Hype might be something for you.
Yeah.
Maybe one of the best apps basically of this cycle, and it has a few of very bullish catalysts coming up. On the one side, it's expanding the whole spot market. At the moment, you can just trade native assets on the layer 1, which are very limited. But soon you will be able to trade something like a wrapped Bitcoin, for example, or a Coinbase Bitcoin. And this could, of course, add a lot of volume. On the other side, we have the introduction of the Hyper EVM, which makes basically Hyperliquid, the layer 1 they have running right now, EVM compatible with an additional EVM or virtual machine that gets added. And both of them are kind of working simultaneously. So a lot of additional assets coming to the whole thing and being able to be traded. And we also have the assistance fund. What they are doing is they are buying a lot of Hyperliquid, the token itself. They just bought about 14 million of it, which is roughly 4.3% of the supply. Which is about 360 million US dollars. So here you see a buyback mechanism that really works and that gets a substantial percentage of the whole supply. Because with many projects, we just see this 0.1% buyback and burn mechanism maybe, but it doesn't change anything for the price. But here we have a lot bigger numbers basically. And what we are seeing, I mean, Hyperliquid airdrop was in November 2024. Basically, it was up only till December 22, and then it is ranging right now. And this ranging is actually quite good, I would say, because if you compare it to most of the other altcoins, it's a huge difference. I mean, we are down about 20% from the highs. Most other altcoins are down 50, 60, 70%. And we were already at a fully diluted valuation of 35 billion US dollars, which is quite a lot. But if you compare it to other quite successful layer 1 blockchains, there might be still some potential if we compare it, for example, to Solana. Maybe a 3x is on the table. I know in the Hyperliquid community, many people like to talk about the $100 per hype, but that might be a little bit too bullish, of course. But the numbers don't lie. If we check the spot order book here, the spot volume on the weekly, for the last week, we had about 901 million dollars, which is not a lot actually. Spot is not perfect, but it can get a lot better because of the catalyst that the spot market gets expanded. The perp trading volume is a completely different point.
Wow.
Here we are at 33 billion US dollars for 1 week, and this is just insane. And if we take a consideration like we have it with other big centralized exchanges like Binance, about 30% of the spot volume, 30% of the perp volume gets traded by spot. For Hyperliquid, we could have very different numbers here. 30%, about 10 billion. That would be a 10x from the current spot volume, and therefore a lot more revenue through fees, of course.
Do you know
So
what the perp volume is on centralized exchanges? Like, I'm just curious how that compares. That what is it, 33 billion last
we
week?
can compare it. I have
Binance,
this
nice.
chart here for the last 7 days. It's also on the weekly.
Wow.
Hyperliquid already did about 15% compared to Binance. If we have 30 billion times, might be about 150 billion for Binance.
Yeah.
And Hype does
Interesting. It's
already
growing fast,
15%
right?
of that. So for a solution that is still more expensive because the funding rates are higher on Hyperliquid, this is quite the achievement. And I myself, I started farming it kind of, then I started using it. I tried other perp dexes, but I always come back to Hyperliquid because you kind of get used to it. And if you get an airdrop, if you make a community quite happy, you have these people that come always back. So airdrops can work actually. I know there are some people that really got huge airdrops, and they are the biggest people shouting on Twitter right now for Hyperliquid. They did a good job, similar to Tao, to Bitensor, for example, where community members became the biggest advocates basically for such a project. And therefore it's interesting. I mean, with about 100k orders per second, we have a highly functional blockchain. There's projects in the DeFi space, lending, AI agents starting, and all of this will basically get enhanced by the start of the hyper EVM. So it's definitely something to look at.
Do they still have incentives? Like, is this incentivized trading, or has that gone away?
We have a second airdrop, I guess.
Okay, so these numbers are nice, but they're also likely people just farming the next airdrop. Is that safe to say?
I don't think so. I don't think so. Only because they proved out the first airdrop that they still maintained a strong level, and their product is legitimately better. It is a better product. So I don't think, and people are going to stop. Were people going to stop trading? No. So I think yes, there is incentives, but I don't worry too much about that in this case.
How many users do they have? Do we have that number? I can't find it on DeFi Llama. Just trying to look it up.
They have
How big is
a
it?
website for all their stats. There should be users as well.
Martin, have you used Hyperliquid yet?
No, but like I tend to be a little skeptical about perps because there was, if you remember, DYDX, everyone was trading on DYDX before. Then there was GMX on Arbitrum, everyone was trading there. Now there is Hyperliquid. So like what's your like mode? What's your defensible? Like if your main differentiation is like the best UX, like okay, so then someone will just do the same UX, and like what why should the users stick with you and just do not go anywhere else? Hyperliquid is interesting because it kind of reminds me Binance. They basically just launch some centralized exchange, or like just forget decentralized, because well, we can say they are also centralized because they have just 3 validators, but anyways, like they just bring something that's clearly working. People love to use centralized exchanges because it's just much faster and everything. And they did the same thing, and they just launched a token associated with it. So like we were talking about ICOs before. So what if this is the way, like bringing, like traditional Web2 applications that are tested and they are favored among people, and then just bring token, and then later on on the roadmap, you start to kind of, okay, now we have users, we have liquidity, so let's grow from here. Now we can start to building later on because we have liquidity, we have users, so why not to attract another devs to build on top of us, right? And yeah, just grow from there. But at some point they'll also start to face the limitations, because now user experience is awesome and the orders are quickly filled, because it's very easy if you have only 3 nodes based in collocated in Tokyo, which needs to communicate each other.
Right.
Or if you have nodes, Tokyo, Singapore, New York, it's very different thing. So like, yes, now they are starting to kind of be more decentralized, but at which cost? Like, is it gonna bring and worsen the user experience, which was the main key product differentiator? That's the question.
But the business is not the same as Binance. I understand it is a centralized blockchain right now, but it's still fully on chain, which means they have orders of magnitude less employees and tech to handle than something like Binance does. So it's not just Binance with the token. It is a different like primitive in itself, you know? And so like the business is probably way more profitable. Let's say, I'm not sure how the revenues are set up yet, but like the business could be, let's say, way more profitable because it doesn't need as many as employees. That's how Binance works.
For example, you have less restrictions. That's definitely an advantage. I recently tried to trade perps on Binance, but I wasn't allowed to because it's restricted in my area.
Right.
You certainly also have the advantage of the layer 1. That's not every perp dex has that. And if you have your favorite exchange, do you change it every time you go for a trade? So could that also not be a mode in the long term?
I'll be honest, it took me a while to switch from like Uniswap over to CowSwap, even though it's way freaking better. But now that I'm at Castle, like I'm definitely not going back. But it did take me a while, just branding reasons, because I'd done it for so long. But that hasn't really been true for perps. As Martin said, we did go from DYDX to GMX to Hype, and it's the same people that are just moving from one to one. I think what will make people move is someone creates a copycat of Hyperliquid and they offer incentives, and now everyone's going to move over and do it over there.
But you still don't have the liquidity. If more Bitcoin on-chain trading volume comes to Hyperliquid, you don't have the liquidity everywhere. And Bitcoin on-chain trading right now, it sucks.
Yeah, true. Yeah, no, I do think Hype they're doing a lot of things right. And it is I don't want to say untapped market, but like it is like you said, GMX, DYDX, they haven't really become anything special. And so like there was room for someone to come in on chain and be the Binance of on chain, right? And obviously that's a very lucrative market. So if Hype can capture that, then that's going to be massive. I don't do perps, so I'm not going to be a user, unfortunately. Are we bullish?
Yeah, I guess
bearish on Hype.
it still deserves, like, we should probably write a report about Hyperliquid. I want to learn more about them.
$25 billion market cap. What do you guys think? Is that cheap?
Not cheap. But it's not going down, unfortunately.
Yeah, right. It never has, which is odd, but it's good. I mean, look at that chart versus the Barachain chart. The difference is just insane.
And the people could really profit from it, and you could get into it early. Barachain is down only, unfortunately. So you see the difference from a VC chain to a also airdrop chain, but it started with a reasonable valuation, at least.
All right, guys. Well, I think let's wrap it up there, unless anyone else has any final thoughts or something they need to bring up that we didn't get to.
Yeah, have you guys thought that I shared the tweet that Meta is letting off like 5% of their employees? Not
Because
in
of
US though. It's like outside of the US, but yet, like, is it like becoming because of those who are not effective enough? And in AI times, you need to be really effective. What do you think?
I think that trend's going to continue for sure. I mean, we are looking at how can we use AI, not necessarily to have an AI product, but to systemize and make everything inside of our companies more efficient. Now, it doesn't mean we'll fire anyone on our team. It just means we won't need to hire anyone new, hopefully, if we can get it to work in the way that we want. Or we'll need to hire a lot less people, except for AI engineers to help build us what we're trying to build. And I would imagine like the level that we're doing it is very small versus like Meta and others. And so I think we're at a place already where AI, forget products, but like can just make systems and things work inside of a company, especially big companies, so much more efficient that you don't need a lot of people. And so I think that trend probably continues. I think we're going to see more of that for sure. But as normal, when new technology comes, you need to hire new people to build this AI and to create those systems and to do other things. And like new things will be capable because of AI. And so like there'll just be new jobs, but we'll have a transitionary period. Although what's a little bit weird in the US is like you're combining this idea of Meta starting to let go of people. You said that wasn't in the US though, but with however many government employees are losing their jobs right now, like I think 60,000 of them quit and got the severance that Elon offered, or Trump, whoever it was. And then I know Elon's just been deleting departments like it's nobody's business. So there's going to be hundreds of thousands, maybe millions of government employees that are going to lose their jobs. And then maybe you combine that with people losing jobs because of AI. It's going to be a weird. This is why like the normal macro numbers that you look at of like unemployment and stuff, I just don't know how relevant it is because it's just the world is changing so freaking fast that like, do these numbers matter anymore? Like, how relevant is it? I don't know. Like, obviously, people not having jobs matters because they can't buy things. But I don't know. It's things are changing quick. That's for sure.
Yeah, and like central banks now, they primarily look on unemployment rate and inflation. Like, how is this going to change in like 3 years, 5 years? What about the inflation? Because all these deflationary pressures, and then you have the job market, which is going to be disrupted in a significant way. So like how are like what they are going to track and how central banks are going to behave in that environment. That's
they need to change that. The good thing is they need to change that for sure. I don't think we're seeing any big inflation. Like inflation's gonna probably creep up a little bit. Maybe at the end of the year as we start to print some money and the business cycle picks up. Like when ISM goes above 50 that we talked about at the beginning of the show, that means a bunch of people are buying things. We're producing more, we're buying more. And it's like usually you have bits of inflation, but it's not like everyone thinks of the inflation that we had in 2021, where we went to like, what was it, like 10% in the US or whatever. Like that's not going to happen. We'll fluctuate from, I think we're at 3 right now, and we'll go up to like 3.4 or whatever, maybe we'll hit 4. But ultimately, I think we're just moving forward. It's just downward pressure on inflation because of things like this. So we're going into pretty crazy times, which you just wrote a great pro report on that, by the way. If you guys, pro members, go read it. It's from Saturday. If you're not pro, go check it out. He just kind of gave his thoughts on how AI is all unfolding. It was like a more meta conversation around AI, and it was quite interesting to understand what's going on in that world. But things are going to change big time. All right, guys, let's wrap it up there. That was a good session. Thanks everyone for joining. Audience, thanks for listening. It's always fun now to record this rather than have it internally with just a few of us. So good times. Sorry, I got so angry about halfway through that.
I love it. Yeah, he's bringing strong energy. That's for sure.
I gotta go hit the Spada.
Everybody listening in, let us know how you feel about this show, and if you like the comments, if you like Kyle being an angry bear. Do you guys want to see more of Kyle the angry bear, or should Kyle come back?
I said that I think we're at the bottom. It's not bearish.
You said you hate everything except for stablecoins. Oh, I love it. Thanks for listening in, everybody. Have a wicked awesome day. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your #1 resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.